So many real estate investors get involved initially in real estate for the cash flow. And don't get me wrong, I love cash flow. I love passive income. It's a wonderful reason to invest in real estate. But real estate comes with a ton of other perks and benefits beyond cash flow. And in some cases, for some investors, more important priorities for their investments than cash flow. So, to talk to us about the different reasons to invest in real estate and how to prioritize them, we brought in Nick Sicilian today. He's a seasoned real estate investor. He's the founder of real estate investing education platform REIAF.com. So, Nick, I'm curious to hear your thoughts about, why investors should think more three-dimensionally beyond just cash flow.
Hey, thanks a lot, Brian. There are so many things that to break down in that sentence alone, right? Cash flow is always the goal, right? Everybody wants that. Everybody loves passive cash flow. That's the sales pitch that everybody uses to sell their courses too, right? But that's not the reality of it. In a lot of cases, cash flow is just a side bonus of it, right? Not to mention, it's not locked in. What happens the next year? Your cash flow in 3 to 500. Next year, taxes double. Insurances go through the roof, right? Anything can happen. COVID can happen again. Rental rates aren't guaranteed to always go up. Right now, we're seeing drastic decreases in rental rates in some markets. So cash flow, while it is a bonus, isn't always your end goal. There are so many other bonuses, though, to owning properties. Every rental property has to be looked at like a bar of gold, okay? You're going to get appreciation out of it. You're going to get depreciation. You're going to get write-offs. You're going to get things in the long run that are going to pay off and actually make that worth your time. And the more rental properties you can stack, the better you are in the long run.
Yeah, I mean, there's so many reasons to invest in real estate, and you touched on some of them right there. I mean, obviously, appreciation can be a factor for a lot of properties. Um, and you and I were talking before the show, and you mentioned that a lot of new investors just don't have that much cash to put down on their properties. So in the beginning, they're just inherently not going to have much cash flow on their investments, but they will be able to take advantage of things like leverage to help them build a portfolio. So yeah, I'm curious to hear some of your thoughts on leverage and some of these other factors that can play a role in the decision to start investing in real estate.
When you're first starting out, leveraging is going to be your biggest gateway, right? Your door opener, whatever term you want to use. It is how you're going to get into the space and actually start scaling one way or another, whatever scale means. It doesn't have to be building a company or getting out of control. But even just going from 1 to 3 rental properties is a form of scaling. Going from 0 to 2 is a form of scaling. All right. So however you're going to grow and scale your business, everybody has to have their own definition of what a business is to you. So when you're first starting out, when I was a lender, people, a lot of times when they first get into these properties, they have to maximize the leverage on it all the way up to 70% or 80% of that final LTV or loan to value, right? Maximize the leverage on it. On those cases, a lot of times you're not going to have high cash flow. That's okay, right? As long as that deal makes sense, as long as you know I can stress test this deal and in a year from now, it's not going to bankrupt me. What happens if rents drop and I have to drop them by 25%? So I was renting it for $1,000 last month, and now all of a sudden I'm only getting $750, right? Can my business survive that? And if so, how long? If I can survive the storm, then it's a good investment. Hold on to it and move on. Take that bar of gold, throw it in your sack, and move on to the next one. All right. A lot of times people want to wonder how to get into real estate. You don't have to do, there's no overnight success in this game. If you're a welder, if you're a tradesman, if you're anything, you can still do this, right? You don't have to be a big old Donald Trump to be in real estate, right? You can just save up some money. There are government programs out there. There are businesses out there that want to lend money to investors for these type of things. All right, so save up some money, go online, go somewhere and find a property, and then invest in it, buy it. Listen, it's going to hurt for a little while, but 5, 7 years from now, you're going to be so happy you did that. I promise you. I'll say that with a confident fist right there. As long
Yeah.
as that deal you can stress test and make sense, do it.
Yeah, and that's an important component of this conversation is stress testing against, expenses rising faster than projected or rents stalling or even dropping a little bit, which doesn't happen often, but it does happen. And we have seen that in some markets over the last year or two. So that stress testing component is important, especially if you're using a lot of leverage. But as you touched on, there are a lot of other benefits here to real estate. Tax benefits, which you touched on. Real estate is a great hedge against inflation. It's also a great way to diversify against your stock market portfolio and your stock holdings in your 401k and your IRA. So yeah, there are a lot of reasons to invest in real estate beyond just cash flow. And a lot of times when you do use leverage to buy rental properties, a 3% or a 5% bump in rents can result in doubling your cash flow because so many of your expenses stay fixed or stay relatively stable, including your mortgage payment. So that bump in rents is largely gravy, every year that takes place. So I love all of that. Nick, in 30 seconds or less, how do you help people and how can people connect with you if they want to take you up on that help?
So REIAF.com or thesicilianbrothers.com. We're always on YouTube. We have a 24/7 Discord community. We're just over 200 people now. So I'm constantly giving out direct to seller leads. That's what we focus on is direct to seller acquisitions, solving problems, actually getting to the meat of real estate. So if anybody's interested, anybody wants to learn, we talk to everybody from quote unquote newbies to high end professionals, people that know everything. So nothing's off the table. Nobody gets knocked for asking a bad question. Just don't ask it twice.
Love it. Well, Nick, thank you so much for joining us today. And guys, if you enjoy these quick, focused conversations that we have, please rate and review the show. It makes a world of difference to us. And on that note, we will catch you next time. Want the cash flow, appreciation, and tax benefits of real estate without becoming a landlord? You've heard of REITs and real estate crowdfunding, but you probably don't know much about 5 other ways to invest passively in real estate. So we put together a free video course for you to show you how to consistently earn 15% plus returns from 5 lesser known hands-off ways to invest in real estate. And even more importantly, we'll keep risk front and center in that whole discussion. Because really, what's the point of investing for high returns if you also take on high risk, right? So visit sparkrental.com/free to take our free course. Each video is snackable at 10 to 15 minutes long, and the entire course takes less time than watching a movie. Looking forward to chatting with you from within the course.